Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of August 5th through 9th. Now, before I begin, make sure you guys are always reading the report first before you watch this technical analysis video. Remember, I have way more details on what our actual swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea and the exact 3-point game plan for each swing trade idea using equity. And that's just a small snippet of what the weekly report says. So make sure you guys are not only watching the technical analysis videos. With that, let's take a look at the markets. Now, last week, we have finally retested the weekly 21 SMA that I've highlighted multiple times last week. And we got that final push lower from Thursday to Friday, which eventually allowed us to retest it and have a nice pivot away from this weekly 21 SMA. Now, you guys are wondering why my lines are gone here. All my technical analysis is that, well, I just want to focus simply on this 21 SMA retest, because if you go back to the previous time and area where we retested the weekly 21 SMA, that was back in April of this year. And when we had this nice pullback here in April, we had a nice percentage move to the downside by about 5.80%, negative 5.80% to the downside. And so with the current move to the downside, we have about a negative 6.40% move to the downside. And so this is pretty similar to what occurred back in April. Now, does that mean we're going to get an immediate V-shaped recovery bounce like we saw back in April? No, right? So we don't always see the market repeating, but we do see it rhyming, just like what we saw right over here. And so with the S&P 500, there is a chance that we can see some sort of a basing price action this week. And I wouldn't be surprised if we do see a similar inside week, just like what we saw back in April, late April specifically, when we decided to pivot away from the weekly 21 SMA. But due to the fact that we're still getting a lot of those negative news and catalysts that I've also mentioned in the market summary of the report, okay, there is a chance that we can be seeing a little bit more of a further move to the downside for some more seller capitulation before we see any type of an oversold bounce. Now, just be careful though, we have been seeing a steady growth in the volume, right, even before we decided to top off and move back to the downside, right? And so again, even before we pulled back, we had continued to see an increase in volume. And at some point in the next couple of weeks, at least minimum 2 weeks, we'll be seeing the weekly average volume line starting to uptick higher, right? So now let's bring back my lines here and go back on the daily time frame. So we have officially filled in this gap up area, and I specifically mentioned that if we do fill in this gap up area, it's obviously not going to be good for buyers since we are trying to fill it by moving to the downside. And that's exactly what we did, and sellers came in very strongly. However, okay, we have also hit major support levels. So 536.50 was one major level, and then 532.50 was the next major level of support. Now, what I really liked about Friday's price action last Friday was this very nice big move to the downside. It's a very quick move, right? Rapid move to the downside. And we also hit a major whole number level of 530, which also coincided with the weekly 21 SMA that I've just shown you guys. And we pivoted away, and ultimately we ended up closing slightly over this 532.50 level, specifically 40 cents above this whole number level. And so if we continue to hold over this 532.50, or at the very least continue to tightly move in between and consolidate in between this major significant level, there is a good chance that we can form a base this entire week, like I've said previously on the weekly time frame, and just find ourselves in a nice inside weekly candlestick, and also just have a very nice sideways price action where we simply frustrate both sides of the aisle, right? So the bulls and the bears. Okay, but I would imagine that earlier in this week we will be trying to frustrate a lot of short sellers first. Right, that's a little hint there for you guys. And so we have our levels to play here, right? Obviously, we do not want the price to continue to stay underneath 532.50, or else we're going to need to focus on this very large demand area that I've highlighted here, which I've also highlighted back in May here, right? This range from 524 to 532.50. It's a very, very large area of demand that was also created when the price hit a new all-time high price back in May 23rd, or at the high of 533.07. Okay, so again, very large area of demand, very wide range of demand, right, from 532.50 to 524. But again, we want to be moving away from this area of demand, which is the reason why we had a very nice pivot as well on Friday of last week. Okay, and if we do see a nice bounce this week, there is a chance that we can continue to stick under this gap down area that we have. So this is our third gap down area that we have not really filled here. Okay, obviously we did fill in the previous one. Well, I guess this is the second one then. But this gap down area will provide a lot of resistance and a lot of overhead supply for buyers. So make sure you guys watch out for this. So, if you do have an inside week, I would imagine that we won't be trying to get over 536.50. Again, we need to be a bit conservative here with our targets for any upside targets due to all that rapid selling that we saw last Thursday and Friday, along with volume. So maximum, I would say 540 could be a possibility this week, since again we will be seeing a potential inside weekly candlestick. So it'll be pretty nice to see a retest of 540, but again, we need to be conservative and look for a more reasonable target like 536.50 for the highs of this week. But again, 540 definitely, it can definitely happen, but we need to stay conservative and look for this 536.50 as the highs for this week. And with that, let's take a look at IWM. So IWM got very, very destroyed, right? From Thursday to Friday. However, if we just zoom out on the weekly time frame, right, I am not too worried, right? It simply looks like a back test of the previous breakout level of 210 and below. Because if you guys remember, I would say around 207 to 210, that was a very rough area of resistance, and a lot of sellers were residing in this 3-point range, right, from 207 to 210. And you can clearly see where that happened multiple times back in April and for most of May here. Okay, and so there is a chance that we have already flipped this area between 207 to 210 as a new area of buyers. But again, Obviously, right? This is very obvious. The weekly candlestick on IWM last week is very, very bad, along with the fact that we had an increase in selling volume. In fact, this is more volume compared to the breakout volume that we saw 3 weeks prior. So, this is obviously not a good look for the bulls in the short to mid term. However, again, if we zoom out, there is still a lot more room for this market cap to run. And if you guys don't remember, we had a nice market breadth burst, a huge thrust in market breadth, right? That's more of a better term to use. And IWM should continue to show more relative strength in terms of, relative to the S&P 500 or the overall markets, the benchmark market. And it should continue to find some footing, and obviously a quicker footing compared to the overall markets. So for IWM, focus on the longer term perspective, which is the reason why last week I decided to cut off the positions that had a little bit of a shorter dated expiration, or expiration dates that were a bit more closer compared to my longer dated expiration dates for our option contract positions. So for IWM, focus on the longer term perspectives. Right, this one should continue to find more positive sentiment as we head into the first official rate cut in September, and possibly even more rate cuts for the rest of this year. And with that, let's go into our first and last swing trade idea for this week, NEE. Now, before I even go into details of this swing trade idea, take a look at what occurred the past 3 trading days, right? So from Wednesday to Friday of last week, we had a very nice burst in volume and a very nice breakout in the price. But if you guys remember, what occurred in the overall markets from Wednesday to Friday? A very heavy sell-off. So this one has been finding some extreme relative strength, absolutely extreme relative strength compared to the overall market. And NEE also is and happens to be an electric name. It's part of the electric sector, or the utilities sector specifically, right? It's electric utilities. And utilities have also found some very, very good strength this year so far, but it's also a defensive sector. So I wouldn't be surprised if individual utility stocks like NEE tend to be very strong as well when the market is in a downturn or in a corrective phase. So this got me wondering, if the markets decide to have a nice reversal move back to the upside, NEE can also continue to move in parallel with the markets, because again, last week it decided to break out while the markets had a huge burst in volatility and a huge burst in selling volume, and we saw the price absolutely breaking to the downside. And so NEE had a nice reversal move where it had an inverse relationship with the overall markets. So it really makes me wonder, if the markets decide to move back to the upside and recover back to the upside, does NEE have the legs to continue to move to the upside and possibly stop having an inverse relationship with the markets, the overall markets, and find a nice parallel relationship where it can continue to move to the upside? But for now, we shall continue to focus on that inverse relationship, because if the markets decide to move sideways, then this one can continue to move to the upside. And why is that? Well, now let's begin with the technical analysis here for NEE. We have a very nice big bull flag that we just broke out of, right? Or if you guys want to keep it a little bit more simple and from a micro perspective, a nice wedge chart pattern. And so right before we broke out of this wedge chart pattern, we had a very, very, very good tight and consolidated trading days. I mean, we even got back-to-back consecutive inside candlesticks that you guys see here, right? And obviously the next day after, which was on Tuesday of last week, we had a very quick kind of a big move to the downside compared to the last two inside days here, right? And we basically took out, it seems like, the weak buyers. And as it came back down to retest the daily 10 SMA, we had a very quick pivot back to the upside and eventually closed over this very nice midline resistance level, which is also the midline level of this wedge chart pattern or this overall bull flag. And then after that, it commenced the very nice breakout from this wedge chart pattern that was also associated with a very nice increase in buying volume. Now, this breakout, it particularly interests me because we have also had a very rapid increase in the share price towards this next magnetic level, resistance level specifically of $80, right? $80. And on Friday, we hit this level. Now, the one thing that I really want to see from this point forward after this retest of $80 is some very solid consolidation, right? I want to see some very quick consolidation. So eventually what I want to see is a nice Momo bull flag, right? A very tiny Momo bull flag at that, but I want to see a very tight consolidation right underneath $80, and I do not want the price to move away from $80, right? If you start moving down and further back down, and if you do decide to retest this descending resistance trend line, I'm not going to be really interested in this name anymore, right? I really want to see some very tight consolidation around 80, and that would also allow the daily 10 SMA to finally catch up. All right, and that is the reason why our first entry point will be a long over 80.25. But again, if you guys want to have a little bit more time and wait out the price to finally consolidate underneath this $80 resistance level, then you can simply look for an entry point over the previous high of the day or last Friday's high of 80.56, which also happens to be right over that 80.50 whole number level. And so again, if you guys just want to use 80.55, or again, if you just simply want to use the entry point over the previous high of the day of 80.56, you guys can just use any entry point, maybe even 80.60 for your equity position. All right. Now again, the option contracts that we need to be looking at are in the report itself. So make sure you guys read the report first. If you guys have arrived to this video, with this time right now, make sure, make sure you guys go back to the report first. So pause this video now and go back to the report to figure out what option contracts we need to be looking to execute for this specific swing trade idea. Right? Now, if you do decide to make this ideal Momo bull flag, I would love to see a retest of $83. So that is our first profit target. And why 83? Well, this is a very, very heavy level of resistance and support many years back, right? So in 2022, and also a very significant level in 2021. But this is where things get a bit hectic, right? Because if you wanted to stay bullish on this name over 83, it is going to be pretty hard for the bulls to find any reason to try to stay over 83. So to stay conservative with all of our targets, just like what we did with the S&P 500, 83 is most likely going to be our only target for this name. But if you want to be a bit more ideal with our target rather than being realistic with our $83 price target, I would say 86 might be our next target, our next area of luck, right, for this stock to move up to. But again, let's be realistic, just like what we did with the S&P 500, and look for a conservative target of 83 bucks. All right. Now, obviously, that will all give us a nice higher high pivot point, and most likely our last higher high pivot point before we see a nice rejection move to the downside. And why do I say that? Well, we had a pretty massive run so far this year. And again, this is just a utilities stock, and there's a chance that we can see a very quick move of strength, but at the same time, a very quick return back to weakness, right? Utility sector tends to be just used as a defensive sector, and at the same time, it tends to be not a very popular sector to be looking at. And so a volume drop-off is most likely possible, even if we do decide to see a very nice next leg up higher or next breakout higher towards this $83 level. All right, so that is it for this video. If this technical analysis video was very insightful, make sure you guys leave a like down below. Again, this smashing of the like button down below really helps out with the YouTube algorithm, so make sure you guys hit that button down below. And if you guys are new here and if you guys aren't subscribed yet, make sure you guys hit that subscribe button along with that notification bell after you subscribe. And why the notification bell? Well, because it will also help you guys know when I am live on Tuesdays and Thursdays, and also it'll notify you guys when I have uploaded a new YouTube video. All right, good luck, and I'll see you all tomorrow morning.